Well, we are back with a new episode of AI Right. Today we're joined by Maysara Hammouda, founder of Predictiva. Maysara, thanks for joining us. Nice to see you.
Thanks, Chris, for the invitation. Happy to be here today.
Good. Well, we're just chatting there. Yeah, interesting time of year for you. You've got a lot going on with the business.
Yeah, yeah. It's been very busy start of the year, let's say. Hopefully it will be a good busy. We'll see. We'll see how it goes.
Good. Good. Well, we've been doing the AI Right podcast for a long time. But recently we've more started featuring founders of Scottish tech companies, especially with like data science and AI and machine learning at the core of the business. So that's how when we had a chat before Christmas, I was really keen to get you on and chat about the work that you're doing. So we'll start by getting a bit of a background to yourself. So just feel free to kind of give us a background and intro to yourself and obviously how you've came to working at the intersection of finance, data and tech, if that's all right.
Great. Thanks, Chris. So as you mentioned, my name is Maysara Hammouda. I'm the co-founder CTO of Predictiva. My background was in engineering in my bachelor's degree. So I studied systems engineering. I used to work in the instrumentation and automation engineering. So I worked for multiple years in some oil and gas automation companies. So I worked with a company called Yokogawa for 5 years. I worked
Right.
also for some time with Saudi Arabia for some others. So that was a bit far from machine learning and these things. It was the classic automation. So you have, for example, a refinery and you want to automate everything in there. So that everything is under control, everything is managed from a central place and all of that. During that, I used to trade myself. Like I used to do multiple like equity and crypto and some other stuff. But yeah, during that, I started saying that I need to get a higher education. I thought about MBA. I studied GMAT and did all of these things. After I finished, and said, no, I still have this technical guy inside of me. I still need to do some technical stuff, and maybe I can do the MBA later. So I decided to change gears and I applied for masters in AI. That was back in 2017, 2018. So there wasn't many options at that point. So University of Edinburgh was one of the biggest ones available at that time. So I applied to a couple of universities, Edinburgh, UCL, Manchester, some others. I got accepted
Were,
to a couple of them.
were you
Yeah,
based in
go
Scotland
ahead.
at this point when you were
No,
considering your master's
I was
courses?
still up.
No.
No, I was abroad. So I was working at Saudi Arabia at that time
Ah,
and
right,
in
okay.
the oil and gas. So yeah, I was not there yet. So I applied to a couple of these universities. So after that, I needed to choose between UCL and Edinburgh. From my point of view, Edinburgh won that battle. I mean, the program was more at that time. UCL now they have very good programs. I've seen these changed from the time I was applying to. But the one in Edinburgh, I like that it was like very uh, it's very specialized, and also you can make it on. So everything was you can choose all the courses actually in that masters. So it was good that you're not going to they're not going to force you to take anything that you don't want to learn. So if you care, for example, about machine learning, and you do not really care about databases or I don't know cybersecurity, you don't need to take these things because it's only 1 year, so it's you cannot really waste it in studying like 4 or 5 different topics. So it's
N- n- That's really
go
interesting.
ahead.
I didn't know that you could choose certain modules that made up your masters. That's a really good offering, obviously.
No, in Edinburgh it's 100% 100% electives. So it was a special one. I haven't seen any other university doing this. So they give you like a bucket of courses. You have, for example, 3 out of these, 2 out of these, and you can have them actually as your own after that. So it was a very nice offering. Uh, so yeah, so I started this in 2015, uh, and then COVID hit. 2020. So I was here during COVID, alone in a small room, similar to a prison cell. So I just during
And
that, so it's
just came on your own at that point. Just came
yes,
yourself. Yeah,
Yeah, I
amazing.
just came in my own. So my family was somewhere else. My wife was somewhere else. Like, so yeah, it was literally
A
like
lot.
a prison cell. Just, but it was okay. So it gave me more time to think about things. So yeah, so the idea of Predictiva came actually just before the masters and during the first couple of months of the masters. So
Okay.
before the masters, I asked myself that question. So if we have all these nice tech like AI, machine learning, and all the stuff, and we have the financial markets, so why not everyone is using these techs in the markets and being rich? So it seems like this is very straightforward. Everyone should be using that. The reason is that when I used to trade crypto myself, it was open like 24/7. So I had to be awake in very weird times, like we're getting all these notifications at 3 a.m. and these things. So it's like there should be
When
a better way
when the
of doing
mar
this.
so that at that point, was that when the markets opened, for instance, that you had to be
The
available at
crypto
that
market is
point to
open.
trade, or
The crypto market is open 24/7, so it doesn't
that's
close.
why I thought that. Yeah, right, okay. But all right, okay, so I wasn't sure that was linked to the time that you were getting up. Sorry.
No, no, yeah. So it's open all day, all like every day.
Yeah, yeah, yeah.
So you can get like a notification at 2 or 3 a.m. about something that's happening.
That you had to react to.
And whenever you wake up and try to react, it's too late usually. So that was not even useful. So the thing was, has to be a better way of doing this. There has to be someone or something that's actually monitoring these things and trying to react in a good way. And that's why I started researching about the available text. Uh, so that was back in 2017, 2018. Yeah, so I started learning about AI like very vaguely at that time. And I said, okay, maybe we can use this tech and then the financial market and see. So when I started um, my master's at the university, there was a literature review course at the beginning of the masters, just to teach you how to do a literature uh, review. So this. So I've read maybe 100 papers. It was written by that time about using AI in trading, and after you read maybe 5 or 6 of these, you know where the problem is. It's very clear where the problem is. But if you're outside, you might not see it. So the problem was mainly that the guys in tech and the guys in finance, they have a huge gap between them. So the techie guys, they have all these sophisticated models, they have all the very deep like machine learning stuff and all of these things. And when it comes to financial data, they might put just prices and volumes or anything naive like that. On the opposite side, the financial guys, they have all the nice financial models with like fundamentals, technicals, microstructure, all of these things. And when it comes to machine learning, they take what we call off the shelf machine learning algorithms and expect that to work. So
Mark.
that will never work. This will not work and that will not work. So discover at that point that you have to pay equal attention to both sides. So you have to have a very solid technical models and also a very solid financial model. And it's not only that, the financial model needs to be designed to work with your machine learning model. And your machine learning model needs to be also designed to work with your financial model. So it's not that we're just going to marry any two financial and deep learning models and it will work. So that was a good finding at that time. So then have done the first version during the second term. It was like a huge project at the university, and it was an IPM prize, like by the company IPM. And at that time, we won the IPM prize for the best machine learning project at the University of Edinburgh back in 2020. So
Superb.
the point was, okay, so now I have the academic proof that this works, and also the industry proof. So the academic from the university, industry from IPM. So maybe we can actually turn this into a business. So I started talking to Edinburgh Innovations. It took a while until we finalized this, and I had other things to do also during that since I was still in my masters. So just when I finished my masters, I met with my co-founder, Ashraf. So my co-founder had a similar idea, but from a business side, and he needed a technical person to do it. And I
Yeah,
had
okay.
this from a technical side, and I needed a managerial person or a to manage the non-technical stuff. So it was
And
like
how?
the perfect match. Actually. So
Well, I was going to say, how did you meet?
that's a very interesting one also. So because it was not meant to be actually. I've done another project with one of the professors at the university at that time. It was a totally separate thing about search engines and some other stuff. And for that one also, we got the best project prize for that one with him, with that professor. So after we finished everything and just before graduation, I was talking about something in social media and he said, shall we sit and you can explain to me some of these points that you're talking about? I said, yeah, sure. So when we sat together, we started talking about other stuff and he asked me, what are your plans for the future after graduation? That was like 2 weeks maybe before graduation, actually. Just we're going to submit the dissertations and that's it. So I told them that I have this idea of a company and I would like to do that and all of this. They said, yeah, I don't have much information about companies, but if I have anything to help you with, I'll do. So in a couple of days, he connected me with my co-founder. So it was like a friend of his. And he said, I don't know if you can work together or not, but it wouldn't hurt if you have a call and then you can discuss whether you can work. So we had a call and then in 3-4 days we had an in-person meeting in London just to because my co-founder does not live here. He's living in Leicester. So we have to meet somewhere. So we met in London. And yeah, we signed everything, I think, in the first 1 or 2 days. And this is one of the things I like about doing business with people who are actually business oriented, that I do not like doing business with people who are slow. If it would take me 2-3 months to get to you and to discuss things and go back and forth, you
Ideas
just lose
gone.
my interest. Yeah, you
Yep.
just lose my interest, and that's it. But for this one, we actually signed on the first day, so we just went there, had dinner, discussed you will have the technical side and I have the non-technical side. It's 50-50. We have these ideas. Okay, let's
And,
sign something.
and are you both all in at this point, especially a business partner? Has he got other business interests or is he fully committed to Predictiva now that he's going to give all his time to it?
No. We decided on that day that we'll be 100% committed to Predictiva. So it's either this or no deal. So just like it was like that. We had an exception at that point. We said until we get the funding, you might work as a part time with some
Yeah,
other way
to get
until we
some.
get the first funding. So I was working at that time with the University of Edinburgh as a research assistant. It was funny that we were actually working at that time, but back in 2020, end of 2020, working on LLMs. So it was actually GPT-1 and GPT-2 was just introduced, but it was a very nerdy topic. Actually, it was not something that people are interested in. It was
Yep.
very like academic, and it was only done with huge customers. Like we used to work like with the UN, with Huawei, with the governments and all that. It was not something that we can provide to individuals. It was very expensive actually to run such services. It's funny to see how this
That's
changed now, and
changed.
everyone can have it for free and even more powerful actually. So it's it's good to see how things has turned out. So yeah, I've worked a couple of months until we get the first
So,
funding round.
so
And then,
do you need the financial data to essentially train the model, or are you taking the financial models that are already created and connecting them with the machine learning models? How does that work?
no. So everything except the price and volume data is inside our model. So we have different modules inside inside the whole, uh, let's say agent. So we, for example, a module for financial analysis. So this has all the technical analysis, fundamental analysis, microstructure, all of these things. And this is actually one of the projects that we have done with the University of Edinburgh, like a PhD project. It
Yep.
took us like 2 years of PhD researching to come up with the final version of that module alone. So, and then we have the machine learning model, we have the regulatory portfolio management strategy modules, we have the execution module that connects your program actually to this. And we all for news feeds and like financial sentiment analysis. And this is where we currently use an LLM. So this own LLM, so we call it a dual LLM for financial sentiment analysis. We can talk about this in detail later if
Yeah.
you want more
Well, I was going
technical
to say
stuff. Yeah.
I jumped the gun a wee bit there. So obviously you set up the startup initially. You've got your co-founder in place. What's the initial gain? What market are you targeting? Is it autonomous trading? Is it for crypto at the moment, or have you got different markets that you're trying to
Cool.
target?
No, our main market was the US market. The Nasdaq and S&P 500. These
Yep.
are the ones we are actually interested in, and this is our main offering, and this is what we mainly offer for B2B customers. So we started with that since the most traded one, and it has the most interest, the most liquidity, and everyone would like to trade that. Um, but before that, actually, in the first couple of months, I usually say that we were actually lucky that we started during COVID, which is a weird thing to say. But during COVID, everyone was bored at home, actually. So both me and my co-founder, we used to have at least maybe 3, 4 meetings a day with people from everywhere, actually. So
All
you
over the
can
world.
actually call the VP of any big bank you want to talk to. The guy, say, yeah, let's have a chat. So now you cannot do this at the moment. That
Now
will be a harder way to do things. So
you're
yeah,
speaking my language there. Um,
exactly.
so no, excellent. So that helped propel you. But when you talk about the B2B elements, and obviously you're trading on S&P 500 and Nasdaq, what
Mm.
so if I've got a business and I've got funds, I can invest my business into certain like stocks. Is it for businesses specifically set up like that, or is it for individuals to trade like they would put
No,
their pension money
this
into
is for
already?
businesses. Yeah, so this is for businesses because the regulation for B2C is really hard to get actually when it comes to such services. So we are going B2B. So if you are a bank or a fund or a family office and you have your funds, build the whole system like tailored for your needs because the needs of a bank is different from the needs of the office or a robo advisory. So each of them has a different customer types, goals, let's say. So if you are a bank, you may sacrifice some of the profits in return of more risk averse trading or less risky stuff that you can do. If you're a robo advisory, maybe you would like to see bigger numbers because you want people to sign up. If you're a family office, you have more freedom since it's your money, so you can do whatever you want with it. So yeah, so if each of them will have a different way of doing things, and that's why I said there are different modules in the agent that are fully adaptable, so you can adapt it to your own needs.
Okay. And at this point, will you trade with? Is it only certain size of businesses, or certain criteria that need to meet standards or revenue or amount that you want to be able to trade on their behalf for you, in order for you to take them on as a customer?
Yeah, so we just need to make sure that you have enough AUM to pay back the prices of the service we are giving you, because if you have, for example, 100K AUM, that will not be even so. Regardless of how much profits you made, you will never be able to pay back the price of the service. And
Yeah.
also for me, a, a big portion of my compensation comes from the profit sharing. So if you only have a couple of thousand, something like that would not be justified for the costs that I'm going to incur to do that. So it's usually a back and forth discussion with the companies. Definitely, you have to be in the millions at least. So just to justify the at least the pilot that they're going to do together. So we understand that you're not going to put all your money with us from day one. So at least you can say, okay, I have this amount. I'm going to start with that pilot amount, and we can see how things go. Yeah. So all these things negotiable based on the terms of the agreement between us and the other company.
At this point, how novel is your idea? How many other trading platforms are running solely on machine learning algorithms, or AI?
It was really surprising for us. There are not many actually. So
Right, okay.
we only found 2 or 3 around the world until today actually. And when I'm talking about machine learning, we talk about actual machine learning. So we're not using like APIs of LLMs or any of these things. So I'm talking about the actual machine learning, building actual models that can understand the market and trade based on that. So there isn't many even until today, actually. So
can yeah, can you give me detail then? So, for instance, if you say you're getting if there's an alert that a stock's taken off at 3 a.m. and your model understands that, that essentially you've got ownership to trigger that and buy into that stock if the model believes that that's the correct thing to do. Is that essentially how it works? Is that what the technology is designed for?
Yeah, so the model works like candle by candle. At each candle in the market, it takes a decision whether to buy or to sell or to hold. For example, just for simplicity, it can be more involved if you want. But now the market is, or the stock is in a buy position because of these things. Explainable AI or explainable stuff that to help you how. So why this decision has been actually made. So yeah, so for example, now this is in a buy position, so you should buy. How we do it is that it actually goes and buys. So it does not just tell you that this is a buy position. It goes and connects to your broker and buys for you. And then it waits until it's a position and it sells for you. So everything from end to end, from data collection to execution. So once you set
Wow.
it up, you will not need to do many things. Maybe you just need to monitor it if you want to monitor it or something like that.
But you can set restrictions at the start, so you can say you can only buy
Exactly.
a certain amount or sell at a certain level and stuff
Yeah,
like
all
that.
of these are in the trading strategy module. That one, you say, okay, this is the amount I have, this is the amount of risk I can get. This is the maximum loss I can handle. This is the maximum amount per trade that I want to put. So all of these things are configurable. And each company also has different way of setting up these things. For example, some of them are like a max amount of money, some maximum percentage of money. Some of them have like different ways based or the market cap, market put more money in it or less. So these are all like configurable parameters that they can work with.
Perfect. And then, so how is so obviously you've set up, this is round about 2020. Obviously,
Mhm.
we're a few years on from now, and at this point, you've got a certain client customer base, you've got a certain market. How did things evolve from there? What was the journey you kind of went on?
Cool. Yeah. So we started first as B2B. That was the main thing. We got the first customer, I think mid 2021. That was the first B2B customer. Um,
Big
we
success,
also, Hmm?
big part, big,
Yeah, it was good.
enjoy
It
the
was good.
celebrations.
Yeah, of course, we celebrated for a while, but then we found that there were actually lots involved in that. Especially that was in a different market, different country, different regulations, different everything actually. So it was a very bumpy bumpy one, but it was a very good experience actually for both of us, for both companies. Then we had also some other like B2B businesses also, and then in 2023 we launched our first B2C service for crypto. It's called Cryptiva. Uh, it's still working until today. So it's just because so many people actually interested in our services and would like to use it for their own trading, but we couldn't do it in any other market. So crypto was a good market to start with. It's open, it's high tech, it's very easy to connect to. It's not similar to the other markets. So we did that. And the final wave of changing and this was last year. So we also moved to a new way of doing things, which is opening our own funds. So instead of waiting for other companies to come and work with us, no, we have our own fund. So you can either join that fund, you can put money in, and you can see how you can trade in the fund. So we opened the fund in Dubai, and we are currently opening another one in Saudi Arabia. The one in Dubai is for the US market. The one in Saudi Arabia for the Saudi local market, stock market. And we also have some other plans for other ones, but yeah, we can talk about them once they're finalized.
No, very exciting. And then from a service perspective, how does it work in terms of if I was a customer, as one of your business customers, or if I was a Cryptiva customer, do I give you a percentage of essentially my returns, or is it a
Mm.
a platform fee? How does that work?
So for B2B, it's usually it's set up in three different phases, three different things. There's a one-time setup fee at the beginning. So it depends on how much time and effort needed to customize everything for your own needs and how many models you want to trade in the stocks, how many markets you want to trade, all of these things. So this is a one-time setup fee. And then you have the license fee that allows you to use the service and also for the regular updates of the models and for the softwares and everything. Uh, but for us is the so we can decide in each of these based on what's what's the best to fit each customer actually. So for example, yeah, each customer, some customers do not want to pay much like upfront, and but they are willing to give you more percentage once the profits are there. Some of them they don't want you to take any percentage, but they want to, yeah, you take as much money you want now as a license, but no percentage. So it really depends on each customer. For B2C, it's a plain uh, subscription model. So you just subscribe, pay the subscription. We don't take anything from you. This is because of the regulation and how things work. So it's
Okay.
this was the only way that we can work at the moment, but hopefully this will change, and we can tell you later.
What about when you were saying you're setting up businesses, and obviously different businesses require certain bespoke kind of setup? Would it be that you would build specific models for specific businesses, or would they all? It didn't matter. The way that the model trades is built the same way for everybody.
So I can put it easily that it's the same algorithm, but not the same models. So the algorithm is the same, the idea is the same, but the models needs to be tailored for your own stuff. So the models that can work in the US market will not be the same ones that can work in crypto. These two
Yeah,
have like totally different dynamics. And even within the same same market. So the models that will trade, for example, Microsoft, are not the same models that should trade Coca-Cola. These two are totally different, actually, and how things move are different. So we have also their stock models. But of course, the variation between the stocks within the market is much less than the variation between the models in different markets.
no, no, it's super interesting. Other thing I was going to ask you is, if you're an SME and you're not publicly traded, how many companies are likely, instead of their money being sitting, if they've all obviously got excess revenues or profits or whatever, and obviously they can pay um their tax, like company contributions, how much of them will want their money to uh, be trading for them and use a company like yours to be obviously managing that for them? And what would be the business benefits to that in terms of maybe not having to pay tax on the dividends or earnings that they take from how their stock performs? Or hey, what would be the reasons for a company looking to
Yeah, I think this is a very good idea actually. Instead of just keeping the money and paying taxes on them, you can make them still continue working
working
for
for
you.
you?
Yeah, exactly. So I'm not a tax advisor. I'm not very like knowledgeable about that part. But definitely, if the money is working, it's much better than just keeping it in your bank.
Yeah.
Yeah, you should. So even when the market is not the best, it's still better than just putting it in the bank and getting 2 or 3%. So the average market return usually, even without trading, I think it's around 10, 11%, or between 8 and 13, something like that. So I just averaged it. Whenever the market is good, you can get even more than that. And it's also good actually. The other thing, it's good for everyone. It's good for the country, for the economy, for everyone else. Instead of just putting the money in the bank, if you actually put it to work and you invest in other companies and all that, it makes everyone actually working. That's even better for the whole economy. So it's
Yeah. Not spot on. In terms of then, um, sorry, I was a couple of things sprung to mind at the same time. The AI aspect, you mentioned that you've got some LLMs in operation for you now. How much is that has impacted the initial ML models that were performing in your business? That is there any kind of LLMs that you need or can take advantage of, or is it pure classical machine learning?
cool. So I've actually attended lots of roundtables and discussions about LLMs when they first appeared, and people were like feeling that it's weird that I'm not really pro LLMs and like in so many things. So they are good in specific stuff, but in financial services, it's not always the best way because LLMs are generative, and you need something that can actually give you the same output every time you run it. So not every time give you like another output based on how the model feels at the moment. So how we use it now, we only use it in the sentiment analysis part. So this is the only way or the only module that I can see LLMs can fit just for understanding the financial sentiment analysis. And we use these. So this one is a separate module that you can use it as a standalone.
Can you,
Sorry, go ahead.
sorry, can you describe financial sentiment analysis, what that would mean?
Sure. So now if you have a piece of news, for example, and you want to know whether this is positive or negative, and you want to trade based on that. So if you do this in a normal sentiment analyzer, it might mean something. And if you use it in the financial sentiment scene, it might mean a totally different thing. So, for example, if you say that the the labor market in the US is really strong this month or this quarter, and they gained all of these jobs in the last quarter. So, in any normal sentiment analyzer, that's a very positive thing. Like everyone should be happy. We have more jobs. But when it comes to trading at the moment in this situation, that's a very negative thing because now you know that the Feds are coming and they'll try to increase the interest rates because they want the inflation to go down. So it's it's different. It's a
Yeah.
different thing. So you need to put everything into perspective, and that's why we use like and sequence. It's not really one for balance and one uh, for the direction or negative, how positive or how negative. So it's something we built in the company. So it's not like ChatGPT or Claude or anything. Something that we built internally, or like uh, and then we developed our own algorithm based on that. So this works as a standalone. So a company can come to us and say, I want to buy this one and I want to use it just as a sentiment analyzer. I want to put it maybe a bit to the analysts in the company. I want to put it in my website or something, one thing. But you can also use it as one of the features that are actually fed to the model. And this is what we do sometimes for some customers. So this would be just one feature that's going to the model. So it's not the decision maker. It's just one feature that the model can decide whether this is important or not. So it based on
Yeah,
the
that's the
situation.
only area that you use LLMs. No, that
Yeah, but it's
makes a
still
lot of
the
sense.
main. Yeah, it's still the main machine learning. This is the way to go in this market. So I would say the LLM might be like 5 to 10% maximum of the whole
Nice.
system.
And in terms of how your algorithms performed in that evolution of your business, how did that? What was that like in terms of the stocks that, yeah, the algorithms that it was picking for the stocks they trade in and the performance of those? Did naturally that increase as the business matured?
Yeah, of course. So during the you can see that at the beginning we were actually optimizing for the wrong things. So let's say we just started, so we were mainly optimizing for profits and accuracy, for example. So this is a very good thing, and we have seen some very good like returns at the beginning. Then and all of this within like a pilot small like fund that we were testing with. So then we found out that when the market was going down, models are not selling. It's like why? And then we found out, okay, if you are optimizing only for accuracy and for profits, the models are not trained to take these losses. They are willing to wait indefinitely until the market bounces because they're not trained to get. We reacted by overreacting. So we optimized for risk-adjusted return and drawdowns, which made the models much more safe. Uh, they do not really have the appetite to trade because it's much safer not to trade actually. So you lost value. You lost actually the part that, but yeah, now it's safe. So it does not also serve that. And then we found out that we should not really optimize for a big ball like that. you need a model that can optimize for lots of things at the same time, not only optimize for a specific thing. So you want it to be to work, let's say, trying to make them all work together. The profits, the accuracy, the risk-adjusted returns, and also the eating behavior. So you want all these to work together. Because otherwise, this will not add value to anyone. Because I usually you only have your value when customers are willing to rely on it. Actually, your product is worthless. Doesn't have any value. That's the thing.
Yep. No, very good. And wanted to kind of touch on then outside of your core kind of product and offering and about the business, more on the business side as to you, you mentioned before we started the podcast that you're obviously approaching your Series A funding, so more about yeah, what it was like to grow and bring in machine learning engineers and data scientists that have supported your growth. I'm sure as your client base has grown and obviously been based here in Scotland and been part of the ecosystem here. How has all that been and taking us into the future of where the business is going?
Yeah, so this was also one. It's a big part of the job, which you don't really see it in your job description. So that you will be responsible for hiring and for getting for all of these things, but you find yourself doing that anyway. We had a pre-seed round, we had a seed round, we had a crowdfunding once, and we had also a private equity. Each of them
So
was different. Yeah.
just taking you back to your pre-seed and stuff, right away did you know that you wanted to raise investment? And was that necessary because you needed a certain amount of funds into the business, or just because you thought at that one point I want to exit this?
No, so we needed the fund because we needed to hire people because there's
Yeah,
no other way that I can hire people than getting the fund. So we got 300, 400K. It's friends and family, uh, like friends of friends and all of
yeah,
that. So
yeah, yeah.
it's that was the seed one, and then the thing that actually pushed this forward a lot was the smart grant. So we got the Innovate UK smart grant, which was around 380K,
Wow.
equity free. So, and you had to spend them in 12 months. So that was the good thing. Now I can force my co-founder to hire people because he's a CEO. He doesn't want to spend money. So now, now, yeah, we have to spend that money. Otherwise, we're not going to get it back.
Yeah,
So at that time, we had, I think, 3 developers. So now we had, okay, so now we have new 3 developers. So now we can push the development forward. So we went from having just a POC or a small MVP into having an actual institutional grade product so that we can actually offer to customers, which was also, it's a big journey. People might actually underestimate these things and they think that if they have a good idea that will work in the market. No, that will take you a couple of years actually to just take the good idea to the market. That's a huge, and you need lots of people. And then you might think that you only need, for example, machine learning engineers or deep learning engineers, but you still need backend. And then you discover you need also front end. You still need like app development. You need MLOps and DevOps, and so you find out that you need all of these parts to make this work. And then you say, okay, I have all of these. Now I need marketing and sales because otherwise I'm not going to sell it. You'll find out every time that you need more funds in mind. So, and that's where you start, okay, and I need to do the next one. So after that, we had our seed round. That was, so before the seed round, we have done a medium crowdfunding, but we have done it a different way. It was not the normal crowdfunding one. So we have done it in collaboration with some social media influencers to build a community for us. So we built a community that has around 10,000 people and all interested on Predictiva specifically and what we do. So when we advertised the crowdfunding to them, we had lots of interest on what we do. So in that
superb.
one, we got, I think, $600,000, I believe, at that time. And then we've done the seed round that was around $1.1 million. We also got one grant from Enterprise. It was smaller, on like 100K. So that's also a very good one. If a company is just starting, they
Yep.
can use that for feasibility studies. That also can help. And currently we are finalizing our Series A. It's a much bigger one. It's a much bigger ticket. We received the term sheet. We agreed on it, but we are just in the process, seeing how to execute things in a lean way. So it's in that
All
execution
very
phase.
exciting. And again,
Yeah.
that's again to increase your team size and obviously your development capability and the size of the business, the amount of customers you can support. It's just purely growth now at this point.
Yeah, it's also a point that I actually had a lecture at the Adam Smith Business School, University of Glasgow, 2 days ago, and we were talking specifically about organizations, and that in startups you don't really set up the scene for the organization and say that we have this structure. So startups and early do not work this way. It will actually evolve by like where you put money and efforts, and this will be your core business, and from that your start uh, having a shape from that. It was mainly all like organic growth, so we did not try to force the company. So we see how business is going. Use that to be willing to start a new thing and to be willing to that do not work. That's also a very important thing. It's like what was you what we always say, like especially in the academic scene. Yeah, you fell in love with the problem, not with the solution. So you absolutely want to use like which was actually many of the financial technology or the financial companies were trying to do in the last 2 3 years. They're in love with the LLMs, even though it's like you just need to know what the problem is and you want to solve that problem, not I want to use that tech. That's a total of approaching these problems.
No, I couldn't agree more with you, to be honest with you. And really exciting, obviously, the levels to get to Series A funding, and especially in quite a short journey as well, as you say, maybe what now traded for 5 6 years. And in terms of international growth, I know you operate across international markets. Have you got plans to go and set up in different locations, or would be always kind of headquartered here in Scotland?
We have done that. We have done that. So we have so our main office is in Scotland. We have an office in England in Leicester, and we
Nice.
have an international office in Riyadh. The one in Riyadh is managing the listen processes because we have lots of work in the Middle East in that region. So it's good also to set up. So we don't yet have people there, but we have the company set up. We have everything is there,
Oh,
so
yeah.
we can do lots of things from there. So yes, because we also start some other businesses there. Like uh, we have, for example, we have a contract with a company with the whole system that they want from A to Z. So we are the technical backbone. It's all like from software, back end, front end, from machine learning, and so all of these things. They're going to get the final product out. So there's also one business that we just started lately, and we see also that this is a big opportunity to offer these services to companies that either do not have the expertise or do not want actually to do that. So we have that expertise inside the team, so we can offer it side.
Offer that.
And yeah, so we are also doing that currently with we are currently like doing it with a couple of other customers, and we're just waiting to see which ones we should start with.
Brilliant. And what about technically, last question, how have you always stayed close to the algorithms and the tech itself, and obviously been involved in that? Have you slowly, other tasks moved you away?
Yeah, so I used to be like very, very close to the uh, tech stack. Lately, I became a little bit further from that, which is something that I do not like, to be honest. I would still like to be a part of the technical team. I'm really just waiting to close the funding round.
Funding round, and you'll get back to it.
Because once we do that, yeah, there's a dedicated sales, there's like the product manager, there's all the, I can go back to being a CTO. That's what I like to do. Yeah, one thing also that we are also, this is the first time that I say that, we're also going to, since we're doing the Series A as a venture debt, because it's a bigger amount that you cannot get like an equity. It's a venture debt, and then we are also running a smaller round for equity. So it will be like a
Nice.
$3 million equity round. This will be for VCs, companies, and also there will be about crowdfunding, because since we also have lots of interest around that. So, but this time it will be like a plain crowdfunding with a very well-known name in the market. So it will be like an easy thing to do. You can go with your credit card or whatever you want. So, because the one we had before was a bit involved. You have to do lots of like bank transfers and all that. So
In order to
it was
get your stake. Very interesting. Well, listen, we wish you all the best. It's been great to hear about your journey, especially obviously based here in Scotland and growing out of your office in Edinburgh. And as I say, we'll look forward to continuing to hear. We'll maybe have you back on a year or two and see how it's all going. Brilliant. Thanks again.